Most people think investing is just about buying and selling stocks, but beginners make costly mistakes that drain their money fast. If you want to avoid losing thousands, stick around because I'm exposing the top 3 investing mistakes and how to avoid them. 1. Mixing. Trading with investing. Trading and investing are not the same. Traders make quick moves for short-term gains, while investors hold for the long run. Many beginners mix both, buying stocks impulsively and holding on to bad ones for too long. Without a clear strategy, they get stuck with losses. How to avoid it? Decide if you're a trader or an investor. If you're investing, focus on research, patience, and long-term growth instead of short-term market swings. 2. Buying stocks based on hype. We've all seen hot stock tips on social media, but blindly following the hype is dangerous. By the time you hear about it, the price is likely inflated. A great company doesn't always mean a great stock. If you overpay, your chances of profit shrink. How to avoid it? Do your own research. Look at company fundamentals, not just trends. Avoid emotional buying and understand valuation before you invest. 3. Falling for IPO. Hype. Many beginners rush into IPOs, thinking they're getting in early. But insiders usually sell at high prices, leaving new investors stuck with overpriced shares. Many IPOs drop in value after launch. How to avoid it? Wait and watch. Let the stock settle before jumping in. Not every IPO is a winner, so research before buying. What's the biggest mistake you've seen? Comment below and subscribe for more tips.